Hello and a very warm welcome. You're watching Policy Watch with your host Kriti Mishra. The Reserve Bank of India has constituted a committee headed by former Deputy Governor Shyamala Gopinath to evaluate applications for universal banks as well as small finance banks. The constitution of the committee is in line with regulators' guidelines for OnTap licensing policy. The applications for universal banks will be initially screened by the RBI to ensure prima facie eligibility of the applicants. Thereafter, the committee will evaluate the applications. A universal bank is a bank that offers retail, wholesale and investment banking services under one roof. The RBI had announced guidelines for OnTap licensing of universal banks in the private sector in August 2016 and for OnTap licensing of small finance banks in the private sector in December 2019. And for deeper insights, I'm joined by Mr. Ashok Nag, former advisor, Reserve Bank of India, and Mr. R. Gopalan, former Secretary, Financial Services, Ministry of Finance. Welcome to Sunset TV, both of you. And Mr.
Thanks.
Gopalan, coming to you first, what is OnTap bank licensing policy? If you could please explain that for our viewers.
Okay, it's a whenever you can make an application for a banking license, it is not necessary that a notification is called for asking you to apply for a bank license, and applications are then received, and then it is, assessed. It was done earlier when Kotak Bank and others were given the license at that time. It was the policy that was followed. OnTap means that you can keep applying anytime you think you are good enough to apply to get a license, and there is a committee which is available, which is having a validity of a period of 3 years. This committee periodically will meet and look into all the licenses, examine them, and see whether they are fit enough to be granted a license. So this is the meaning of OnTap. It's not necessary that a notification is issued and then called for applications for banking license. You can keep applying whenever you have the ability to apply, whenever you want to apply, and this committee will meet periodically and examine those applications for grant of banking license.
All right, so that was the OnTap bank licensing policy. But Mr. Nag, we'd just like to understand, now that the committee has been formed by the RBI, what are the challenges and the expectations, sir?
See, RBI has formed a standing committee for external, the experts for advising the at least the first level kind of scrutiny and the advising to the RBI whether license should be given to or not for universal banking. But point is that if you look at the composition of this particular advisory committee, is basically most of the thing. Shyamala Gopinath is ex-deputy governor of RBI, Mahapatra B was the ex-XD, and ultimately, if any license application is submitted to this committee, ultimately due diligence has to be done by the internal RBI, the departments. I do not think that this committee will have a kind of a wherewithal or the kind of a expert, the resources which is required to do the due diligence. They will depend on the RBI internally. So this committee can be a buffer for between the RBI. Decision will be ultimately taken by RBI, okay, governor and the RBI board, and one of the board member is also there in this particular committee. So it will be acting like a buffer, so that if you would like to say that certain kind of applications will not be forwarded to the RBI advisory things, then it can be a buffer. But ultimately, decisions and the due diligence which has to be done by the internally to the RBI. So I do not see any specific kind of a very big advantage that this committee, which is standing committee, will be accruing to RBI as such. But sometimes it is always advisable to have a committee so that you always can depend on the committee's things as a kind of justification for either giving or the not giving approval to it. But ultimately, it will be internal decisions of the RBI, particularly governor and deputy governors, and they will be definitely looking at it, because ultimately the people who are decision makers here, one is already a member of the RBI board, which will ultimately take a decision, and both are the DGs and the EDs are there. They are already know how the RBI works. how the RBI is taking decision. So it is just a buffer. It will work like that. That's my kind of a reading of this entire committee that is going to form.
All right, Mr. Nag, you're making a very interesting point there, and let me take that to Mr. Gopalan. Mr. Gopalan, how do you respond to the concern that has been flagged by Mr. Nag?
Well, this committee, there needs to be a committee to examine in detail about the ability of the persons, the people who have applied, whether they have been in a position to carry out the banking activity. It has to be an examination in detail by the committee, which will go into all aspects of how the applicant will be in a position to establish a bank and run it, and those kind of things. They have the adequate capital. Those kind of things will be looked into by the committee. Obviously, the committee will have its secretariat from the Reserve Bank itself. The examination of all the facts or details submitted by the applicants will be examined internally in the RBI and put up to this committee. The committee will look into, set some parameters and look into whether those parameters have been adhered to by the applicant while examining these applications. Ultimately, the applications will go to the board, the RBI, the board, and they will take a call, whether they are going to take a call as a board as a whole, or it is going to be internally the RBI deputy governors and governor himself will take the call. That is something which there is a mechanism within RBI for getting that done. The ultimate decision will be with the RBI.
All right, so we'll have to wait and watch and see how this entire mechanism works. But expanding the scope of the debate and talking about universal banking system. Mr. Nag, we understand that universal banking is a system in which banks provide a wide variety of comprehensive financial services, including those tailored to retail, commercial and investment services. Help us understand, how does the system work?
See, universal, the word universal is used to say that all these services any standard bank provides will be available to this bank. For example, the differentiation is made with respect to, for example, small finance bank. Small finance bank, a regional kind of restrictions. And for example, payment bank. Payment bank cannot give as per the definition of the payment bank, they cannot give advances. But so far as the universal bank is there, they can give all financial services, including payment services, and including issuance of credit cards, and also giving advances and collection of deposit. There is no restriction on the deposit. For example, payment bank, so far, earlier it was the 2 lakhs rupees was supposed to be the maximum deposit. Now I think it has been increased to 5 lakhs. This kind of restrictions do not apply to any universal bank. So it's a full-fledged services they are allowed to provide to their customers to the end. That is what is called universal banking.
All right, sir. Mr. Gopalan, coming to you, what are the guidelines for OnTap licensing policy for the small finance banks?
Well, there is a restriction on what is the kind of, equity they should hold and what is the kind of net worth they should hold. I think it's about 200 crores or some such thing. That's what I think is the number. Now, the initial, when they have this 200 crores, worth of equity they must hold. Then the percentage of equity they should hold is also determined. It's about 49 or whatever to begin with. And there is a time frame in which this number is brought down. That is given in the guidelines itself. The fact that small bank is required to do basically a small regional activities and small loans being given. The requirement for a capital which they need to hold, like a universal bank has, they need not have to have that. So they are restricted in terms of operations, the kind of operations they can do, and therefore the kind of capital they are required to have is also somewhat much smaller as compared to what universal bank is required. And as Mr. Nag says, there are restrictions on what kind of activities the small banks can do. I don't think they can do a foreign exchange transaction. They cannot do a big loan, or they cannot do, the investment banking activities. There are a lot of other things which universal banking does, which a small finance bank cannot do.
All right. So are we to understand, sir, that large industrial houses are excluded as eligible entities in this scheme?
Now, let us look at it. There's a working group paper put up by RBI indicating that there is a possibility that industrial groups can also apply. But that is still a discussion paper on which no final decision has been taken by RBI as of now. Until that decision is taken, I am told that industrial houses cannot apply. But even in the universal bank and other things, there is a small provision for 10% which the industrial house can hold. There is a small provision which I think is still there, and if my memory serves me right. So, but that does not give any ability for industrial houses to influence in the way in which the loans are being given by the banks. So, and how the way in which the bank is run, the board is constituted. There is no way the industry house will be in a position to do any influencing of the way the loans are given. Otherwise, as of now, the debate is raging in a very, very big way. You must have seen Mr. Raghuram Rajan and others and
Yes.
Viralacharya against the industrial houses coming into the banking side. And there are a few others who are arguing the other way as well. So a final decision is yet to be taken.
All right, Mr. Nag, what do you think? Should the industrial houses be included or excluded?
See, for the industrial houses, if the license has to be given, first of all, Banking Regulation Act 1949 has to be revised, okay, amended suitably. But beyond that, what is the arguments which are given by the Raghuram Rajan or Viral Acharya and others for the not giving license to the thing because of the fear of connected lending? If you look at the corporate houses, when they have a large kind of industrial houses, they have a lot of businesses which is already availing credit from the banking sector. Huge banking, the exposure of the banking sector to large corporate is quite high. Now, suppose some of these large corporate houses start their own banking, universal banking license, they get it. Now, question is that what will happen? Will this entire corporate lending of the exposure of the existing banks will migrate to these particular banks, and whether it should be allowed or not? Now, if you are giving in universal banking, are you going to give a very specific reason, a kind of a conditions that no connected lending will be allowed? If no connected lending is allowed by these things, I doubt that what is the advantage, what is the kind of a, because see, the existing corporates, you want to diversify to the financial sector, they have diversified in an NBFC. Now, if you want to start a banking thing, the financing, what will be the advantage they will bring to the banking system in terms of the, the operational kind of efficiency or things like that, or they'll be more interested to get their connected lending. How do you, this conflict of interest, how do I manage it is a very big question that has to be addressed by RBI. And unless we have a kind of mechanisms which can be resolved this kind of problems of connected lending, then it is advisable that we should not give a license to the industrial group. In fact, as far as I know, RBI so far, there's a huge kind of a, you can say the opposition within the RBI giving any kind of a license to the industrial houses.
Mr. Gopalan, do you agree with those arguments made by Mr. Nag?
See, the arguments are always, has to be seen in the context. For examples, if you look at the USA, JP Morgan, Bank of America, who are the largest shareholders? Individuals, it is either bank's own CEOs or the other employees, or large, investment kind of a organization, investment like bank. See, for example, JP Morgan, it is a BlackRock, Vanguard, and the Berkshire Hathaway. These three are the largest shareholders, and they control, 30 or 40% within this. Now, they are not that way, is a industrial houses. They are different from the, say, Excel or the Googles or something like that. They are not industrial outright corporate houses. They are basically investment kind of a financial investment kind of company. They invest and that is their business. So for them to have a connected lending is not a big kind of a risk for them because they don't have that requirement because they are taking money from their big investors and investing in the securities which they feel that bring a kind of benefit largely at a long time. So for them, the connected lending is not an issue. Their basic thing is that how do I deploy the funds I have collected to the various kind of securities. But if you allow, for example, the say ExxonMobil or somebody else who have a large kind of a lending, okay, I mean borrowing, whether they should be allowed or not, that is the question we have to ask it, and that does not happen in the thing. In fact, if you look at the USA, UK, German, it is the decision of the central bank, Federal Reserve. They decide, okay, whether and they are always very clear that connected lending should not be allowed. And so far it
Absolutely.
has happened. So
Yes,
point
sir.
is, so this point has to be addressed. How does RBI will resolve this issue, this conflict of interest? And if the conflict of interest is properly resolved, there is no issue. We should allow it. But I doubt there is no kind of a advantage accrues to the banking sector in terms of the efficiency of the banking activities by bringing the corporate houses, because they don't have any banking experience so far. So what is the advantage I'm going to bring, for example, very large corporate to become a bank? I am not sure that it has to be proven that what kind of advantage in terms of efficiency, in terms of the experience thing. And they are already, are they going to bring a large kind of amount of the capital there? Because
Yes, sir.
most of them are borrowers through the banking sector.
All right, sir, you're making very valid points there. Let me take that to Mr. Gopalan. Mr. Gopalan, where do you stand in this debate?
Well, this is, I mean, Mr. Nag has given a lot of experiences of what happens in US and other countries. That's basically a dilemma. Do we need to have capital in this country for people to organize banks? There is enough capital in this country. Okay. Now, if you think that, I mean, there will be the connected lending will be deleterious to the health of the banks, yes, it will certainly be deleterious to the health of the banks. And our problem is that the kind of supervision and regulatory mechanisms which we have, how effective it is something we are still not extremely happy about the way that mechanism is. The RBI itself is now strengthening its supervisory system in the regulatory on the regulatory side, and now you will find that, I mean, even in if the industry houses are able to get into this kind of a banking activity, you may say that, I mean, you'll put some restrictions on how much one can give to each group or whatever, but then there are very many ways in which this can be supplemented. You will never be in a position to know about it because all your regulation keeps following what has already happened in the past. We are not able to imagine what will happen and then accordingly set up the regulatory system. So this is another issue which we face everywhere. It is not, I mean, peculiar to it. It is everywhere. This is this problem that has been arising. So our worry must be whether there is not enough capital so that the industrial houses have to be brought into this country, or is it something else? They have got extra experience and knowledge which they can use to ensure that the banks are run in proper way or not. These are some of the considerations you must have to decide whether you need the industrial houses to participate in getting licensed to run banks. For the balance of advantages, balance of convenience, the arguments given by Mr. Nag and the arguments which I have also, I mean, been able to propose, I do not think the time is right for industrial houses to get the banking license at this point in time.
All right, so those are valid arguments given by both sides. But another important issue that I'd like to touch upon, Mr. Nag, it was argued that in the last round in which IDFC and Bandhan obtained licenses in 2014 was carried out almost after a decade. Are we looking at some kind of time frame by which a license would be awarded or declined?
See, today, if you are taking that OnTap license, if you make an application and then the license which will be given by the bank, okay, and then, for example, just look at the payment banks. I think 10 or 11 or 13 licenses were given. How many are working there?
Exactly.
Some of them are actually surrendered the license. Okay. So question is that even if you give a license to even suppose industrial houses are allowed, you give a license. It is not it's not something very simple that you just tomorrow you set up a big kind of a banks and all the branches are there. Even if you started that digitally, and that banks is digital banks, okay, so that you do not have to start branches everywhere. You do not have to think that it should work within a frame of that a bank can be established and made functional within a year or so. It will take time. There are a lot of now. Question is that if you have not been in the financial sector, where you are actually knowing that at least how the payment system works, what are the ways the financing is being done. If that is not there, if you start doing these things, you bring the expertise. Of course, you can bring the expertise from the market and do it, but to get it done in this is not be so easy. Point is that if it takes time to establish a large bank with the things like that, whether the your calculations of having a bank's financing, because obviously you are a profit making company, so you have some kind of time frame by which you should be able to do it. Now question is that the day you are giving license and the way you have to bring down your equity capital, within that the things may drastically change within that framework, and then you will be in a limbo. So it is not very clear that whether the if you given banks are given license, it should not happen that because it is an OnTap license. So there is no question of having a license and hold it to it. The license has a continental income. That is not going to happen here. But if you take a license and then you do not implement it is just for the sake of that. It will be only the wastage of the supervisory resources for doing due diligence of the particular corporate financing. What is the guarantee? Is there giving a license? Are you making a penalty that if you do not implement it in the next 3 years, you will be giving a certain kind of a bank guarantee that if you are not going to establish a bank, will it happen? Otherwise, why should I at all do due diligence within the bank RBI to find out? Because you have to do due diligence, you have to have resources, you have to do the kind of forensic kind of or various audit of your entire balance sheets of the particular group which is applying for license. It will take time, it will have to take resources, and if you do not do it, any hold a license for 3 years and then surrender it, should it not be penalized?
Exactly. Right, sir. That's again a very valid argument that you're making. But before we end this conversation, Mr. Gopalan, the impact of this policy in providing financial services to the unserved and unbanked regions of the country.
Well, the penetration of the banking in this country has increased, but then it is not adequate to cover the whole set of people. Now, technology plays a big role.
Yes.
Now, Governor made a point that, technology, the technical financial tech companies, the financial systems, the way the technology works to connect the people to the last mile to get the deposits or give them some advance or something, that is another big area which has undergone a tremendous revolution in this country in the last few years. Now, that is the fourth arm, I would, as the Governor says, would be for us to take the banking to the masses. Unfortunately, the kind of credit to GDP ratio in this country is not as high as compared to many other countries, which really indicates that the banking depth of penetration of banks to the ordinary masses is not that effective, and therefore there is need for more banks. Whether the existing banks themselves expand in an organic way, in a very, very fast manner, or is it going to be new banks which are going to fill up certain gaps in certain regional areas, or is it going to be getting into certain products which is still not reaching the various people in the country? These are all things which market forces will determine. But the fact remains that the penetration of banking in this country has to increase significantly if we have to really make the economy formal and make the economy function with the loss of efficiencies in various processes, which various industries and various enterprises will have to go through. This is my opinion at this time.
And of course, we are also treading on the path of financial inclusion. And for that, penetrating the banking services across the regions of the country, that is of paramount importance. But on that note, thank you so much for joining us. So that's all we have for you in this edition of Policy Watch. Thanks for watching and stay tuned.